Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. Well, it was a quiet morning until about a half hour ago or so when we saw news that Elliott had released a letter about AT&T disclosing a big stake and talking up the stock. AT&T this morning having one of its biggest moves that we can ever remember. So we'll talk about AT&T this morning. That'll be the lead story of our show. There is some other stuff to discuss, but AT&T is the big news this morning. Our guest today, Michael Pachter, equity analyst at Webush Securities. He would join us at 8:35. In the meantime, Joel, what's happening here overnight?
We're green, up 8 3/4 handles, 29.8950. A little bit of selling on the close, but they bought it right up until 5 o'clock. You're open at 80 1/4. You're low 80 even. Just trading off the highs at the highs of the pre-market session, 89.75, clearing the high from last week at 88 and change. Nothing up here, folks. No daily resistance until you get into the 3,000 handle, 3,014.50. That was your August high, your August 1st high. Moving on, crude up 40 cents at 56.92. Gold back in the green, up 370 at 15.1910. Silver up 16 cents at 18.28. Bitcoin just hanging pretty much unchanged, up $25 at 10,485. Triple D, AT&T. I sure hope you're long.
I just want to hold up here because we got everybody saying the YouTube video is not working. It's not working for me either. I just checked it, so just make sure, Spencer, if it is working, the show will go on.
The show will go on, but I see it working for me. Let me do a quick refresh here, but let's keep going.
Okay, let's refresh the pages. If you can hear, if you can hear it, obviously it's working for you. But
I hear a bring back Seth chant.
It's working now. Yeah, it's working. Now we bring back Seth. Okay, before we go into AT&T, which I got a little horror story for you here. Obviously, Monday morning horror stories. Let's ask Spencer about this wedding. He was off for 3 days.
Yeah,
so must have been pretty good.
I'm sorry. I lost my voice a little bit. I don't know if you can tell. It's coming back. But
my voice too.
It was a great wedding in Des Moines, Iowa, which is a nice little town if you've never been. Nice little small town. A lot of good beer out there. But did not get to go cow tipping. Was very disappointed and did not.
Oh my goodness, that would have been like the highlight of your life. Cow tipping.
Did not see a lot of corn either.
Why did you not go cow tipping?
It wasn't on the agenda, man.
Oh,
we had a pretty packed schedule. So
I've always wanted to go cow tipping.
Yeah.
That's like on my bucket list. It's like number 1, cow tipping.
I attempted it.
Have you done cow tipping, Joel?
Yes.
Oh,
I tried. Well, this is what happened.
Forever.
We went to a Michigan-Purdue game. This is when I was a freshman. And we drove back, and we were driving back in I don't know where in Indiana. And we decided that we were going to go cow tipping. And it was dark. We got out of the car, and we went down. I don't know. We probably thought we saw some cows. We walked maybe, I don't know, a couple hundred yards. And then we all looked around at each other. It was pitch dark in the middle of the Indiana. And we're like, you know what? This is probably not a good idea. We didn't find any cows, but I attempted to go cow tipping.
Oh, so you didn't actually tip?
I didn't actually do it.
You can get hurt. How hard it is to tip a cow?
You can get hurt doing that.
Well, probably if you tip it the wrong way. You probably get dead.
All right, AT&T.
Okay, yeah, AT&T. Tell us this news. I'll tell you my trade.
All right. Letter from Elliott Management out this morning at 7:34 a.m. Eastern Time. They highlight a compelling, I'm reading directly from the release now, compelling value creation opportunity, $60 a share in cash. I'm so used to reading M&A headlines.
That's what they said.
$60 a share is what they think the company is worth by 2021, the end of 2021. That would be a 65% upside to today's share price. Well, not anymore because the stock, as you can see, as I pull up the chart here, is way higher. So Elliott outlining Several ways they see this outperformance happening, and you can go to the website they have is activatingatt.com. It's all over the interwebs, but AT&T is a rocket ship right now.
Must be nice to just be able to go buy stock, then write a letter, and watch the stock go up 10% because you wrote the letter. That must be nice, isn't it, Joel? Well, that must be nice.
If we did it, it'd probably go down 10%.
I probably go down 10%. Anyways, I've been dead wrong on this one. I sold it out of my long-term portfolio after holding it for a decade, and I sold it right around 31 bucks just about 6 months ago. Obviously, horrible timing. I guess this is why I don't trade the long-term portfolio, but I just wasn't a believer in the long-term story. I didn't see where the growth is coming from. I don't know what they're highlighting to get to $60 a share, but it looks like it's trying to go there right now. It's up 10%. It's got to be one of the biggest moves for AT&T I've ever seen. So coincidentally, I just happened to be long in overnight. So you think, oh, you must be having a pretty good day if you were long this overnight. Well, I happen to have an order sitting out there, and I went to the bathroom at 7:32. This letter came out there at 7:34. Come back from the bathroom at 7:36, and literally gone for 4 minutes, and I've sold my AT&T. And I see it $1.50 higher. And I'm like, what happened? And then I'm reading, I'm like, oh, and then I look at the timing of it. If I'd have been sitting here, I would have definitely been able to get my order out, my sell order. But I was just selling it because S&Ps are up a little bit. I was like, oh, if AT&T, typically I do a lot of arbitrage. We know I do index arb. AT&T is a big component of a lot of indexes there. So I just happened to be long. And I was like, if it's going to go up that far, 20 cents or so, I'd be willing to sell it. Go up 20 cents, went up $3.40. So anyways, the market making aspect usually works pretty well. Sometimes you get picked off. In this case, I would have been pretty much picked off. But if I was sitting here, I think I would have had the time to get the order out. I think I would have actually been able to still be long it. Although I will tell you, there's no way I would have held a long up $3.40 an overnight long. I probably would have been selling that when it was up $1.50. Because this seems absolutely ridiculous. I cannot believe it went this high. It looks like it wants to go to $40. I have no position in it now, so I can freely talk about it. I think this is ridiculous. I think it's a ridiculously overdone move. If I was long it, I would be selling it. But these moves can continue for a while. It is in favor. It's probably going to go to 40 because why not? You've come this far. Why not test 40? See what happens at 40. But I'm not chasing this move.
So looking down into the release a little bit, the bottom line here, I'll just read from it. We believe that AT&T is best positioned to be the market leader in 5G. That's probably the number one headline from what Elliott.
5G buzzword.
5G for Elliott. There's other
buzzword.
There's other reasons they like AT&T. They like it for entertainment, Warner Media, wireline, but 5G and wireless. That's probably the biggest reason.
It's why. The buzzword.
Why they like
everybody wants to hear that buzzword, the 5G buzzword. So why would you not use that in the letter? I mean, Icon, all these companies, this is legal for them to do it this way. I mean, it's, they're buying a position. It's just, it props to them for getting the following that they do, that they can drive this thing up 10%. I cannot believe this is up 10% on this letter. People see $60, the algo see $60, and they're like, whoa, big money here. I mean, it's a thought that it could go to $60 under their proposal by 2021. That's what they think. It's an opinion.
That's what they think.
I think there's zero chance this is $60 by 2021. That's my opinion. So, anyways, like I said, I can talk freely of it now because I have no position in this whatsoever right now. Sold it before the letter came out. Actually, 10 seconds after the letter came out, and I think it's overdone.
Well, you have made an excellent point too. Look at the timing of this, right? This stock makes a run from 31 and change to 36 and a quarter.
Yeah, wind in the sails.
Yeah, unbelievable, which is just a huge move for it. Momentum, and now I don't know if you got old shorts, new shorts in there. There's some people that short this stock and probably don't even think about it. And here you at the high of the move, a good day to do it. And they just jammed it. The timing, I mean, if Elliott's not looking at charts and timing when to do this, then call me Rumpelstiltskin.
I mean, we've argued against this for a while. And I mean, it's hard because it's an opinion. I mean, Icon does it too. Buffett's the same thing. I mean, Buffett's not trading off of it though. And obviously we've talked about Citron. There's a lot of companies, Sprucewood. People give their opinions. These hedge funds give their opinions. and they voice them, and people listen to their opinions, and their opinions are worth money. They know that. I mean, so they get disclose a 3% position, and boom, come with a letter, and all of a sudden they're making 10% on because of their own letter. So it's incredible the influence that some of these, hedge funds and activists have out there. It's incredible. And I mean, I don't know who loses here. Obviously, everybody who has AT&T in their long-term portfolio is smiling here this morning. I just think, I think it's ridiculous that it can move 10% on a letter.
Yeah, I mean it's
an opinion.
Yeah, it's
not like they came out and they announced something. They threw the 5G buzzword in there, and they're pushing it 10% higher. It shows you how much the market is just driven by headlines. And this is a headline, obviously. Oh, Elliot's got a stake. Elliot's going to push this thing to $60 a share. It's crazy. This market is just irrational, in my opinion. It's so irrational.
October 28th, 2008, I believe, was the last time AT&T moved 10%
in 11 years. It hasn't moved up 10%, and it moves up because of a letter from an activist.
That was during
that was the crisis.
Yeah.
Yep. So
it's unbelievable move.
We'll keep an eye on that pre-market high, $39.94. Mentioned that $40 level is a potential target. We haven't traded over $40. You need to go back to 2017. You traded up to $41.77. That was a monthly high. But keep an eye on the pre-market high. Also, that psychological $40. A lot of stock has traded over 5 million shares. So whatever's in the book, I mean, if they don't cancel it, I mean, I don't know. You could probably get a lot more than 5 million.
Nothing in the book that's going to hold it down.
No.
Just because, maybe 40. Just because it's traded 5.5 million at 8 o'clock in the morning. This thing's going to do like 20 million before it opens. So much stock trading. So it's unbelievable. Yeah. I cannot believe it moved up this much on an Elliott letter. I just shake my head. I can't believe it.
And they had the stake.
I'm speechless on this.
Yeah, and there's really nothing else. I mean, there's really no sympathy plays here because.
Well, Verizon is up a little bit, but I mean it's direct. So Verizon's gonna, rising tide lifts the ships, right? So you're seeing Verizon trade up 1% on this too, but it's nothing to do with Verizon. So it's very specific to the company there. But I mean, holy cow! Can you believe? I've been on this like 5 minutes saying how much I'm speechless. If I own this thing, I would be hitting every bit out there if I had this thing. But I mean, I don't, and I'm not shorting it because these things can get really silly sometimes. So, and obviously this one I feel is very silly to be up 10% on the letter. But the wins in its sales. I mean, you're shorting a rocket ship right now, and it wasn't like the thing was in the gutter. The thing was pretty hot coming into it, so you didn't really have much in there, really. Even when you look at the charts, I mean, it's still AT&T and it's thick, but it's not like you were at $30 and you're going to have all the people willing to sell 32, 33 that are underwater. Anybody who bought this in the last year is making money, so they timed it perfectly.
How about the ARBs doing the AT&T Verizon?
The pairs traders? Well, hopefully you got the AT&T long Verizon short and you're making 9%. You got it the other way and you're throwing up.
Yeah. I don't know how many standard deviations there is, but
it's a crazy move. We just looked. It's been 11 years since this went up 10%. How many earnings reports is that? You're talking about 50 earnings reports. 44 earnings reports in 11 years. Not one drove it up 10%. A letter drives it up 10% from a stakeholder. It's unbelievable. Market's completely irrational. It's lost its marbles.
So Elliott owns $3.2 billion of the common stock and economic equivalents, so probably calls. And this is one of their this is a new stake, by the way. This was not in their most recent filing. So this is a new stake, or this is their first disclosure of this stake.
What to say? Like an upgrade from an analyst that follows AT&T typically moves the stock. I just know it because I trade so much and I trade upgrades and downgrades. We'll move a stock, move AT&T between 1% and 1.5%. This is from a hedge fund. It's up 9% on it. I can't believe it. I cannot believe it.
Well, we'll see if it can hold the gains. Obviously, that pre-market high is right near the $40 level. Anybody, coming in with like 36, 37, 38, your 39 calls were probably dirt cheap.
39 calls would have been going for nothing. Anybody who's long calls on this thing is just cleaning up. I don't know. Let's go. That's a fun conversation, and nobody's gonna know. Well, you'd hope nobody knows what the Elliott letter come. I would hope Elliott is not disclosing to their buddies that we're gonna send a letter. I would hope that's not the case. So we're assuming that's not the case. So, but just curiously, let's go look at the calls. Let's just look at.
Platform open, or you want me to open mine?
I can open it quickly and just take a look. I'm gonna be going for nothing. The thing doesn't move. Maybe 37s are going for like a dime probably. So 37s on the October. Well, okay, that's October though. So I'm looking at monthlies. I don't have the weeklies open. So I was looking at the monthlies. So literally you're looking, no, actually that's October. I don't even have the September up here. I don't know why. Yeah, you might have to open it. Even October though. But just looking at even to October, it was 35 cents, the 37s. 37s, month and a half away. The 36s were probably going for a dime. Killing, or I mean, like the Septembers were probably going for a dime. Options, anybody who's long options on this is killing it.
Yeah, and they have the freedom to trade the stock against it. But all right, big news here on the Monday. I was asking if when I came in, looking at the macro news, looking at see if there was anything starting to leak a little bit now. You might have seen the high, Dennis. You might have getting that close.
Did it go to 40?
39.91.
Almost to 40.
Yeah.
I just feel like you went this far. Why not go to 40? So I still think you could see it at 40, but maybe hit a few. There's no way short. There's not a lot of people short. What was the short interest on this?
Spice says
not a lot.
3.63.
Yeah, pretty small. You're not squeezing. This is just hopium trade. People see $60. Elliott knows going to $60. Elliott, buy. Algos, buy.
And Joel, you had a good point. With Dennis mentioning the algos, the irrationality of this move is because it's not human driven, right? And the algos see the price, right? The algos see 60, whatever.
Some of it. I would say that's true in the first few seconds. After 20, 30 seconds, you got some humans coming in here too. The algos made their move in the first, they pick off whatever is there in the first few seconds. I would say that's not true as of now. Now we're half an hour after this news.
Well, okay, maybe now.
I would say it's all, human, a little bit of algos too. I mean, whipping around, but a lot of human action here too. There's just, people that are really excited. I mean, they come in here, they're like, I've been wanting to buy AT&T for a long time. Now Elliott says it's going to 60, buy. Calling the broker, buy. Elliott says this is going to 60. I'm telling you my opinion on this. This is my opinion. It's not going to 60 in my opinion. Not even a chance.
60 plus. More than
I think no. That's my opinion. So sorry, Elliott. Respect you. We very much respect you guys because holy cow, I cannot believe you moved AT&T 10%. But that's $60. It's a pipe dream, in my opinion.
All right, what else you got for us, Spencer? The show sponsored by AT&T.
Yeah,
here.
right.
And Elliott Management.
And Elliott.
A lot of free advertising, Elliott Management, right there.
Okay,
there was no open interest here in the weekly calls. I'm looking in the 38s. There were 8 for open interest. In the 30.
Nobody knew about this. Elliott kept it tight. They have to.
Yep.
I mean, if it ever got out that they were telling their buddy, they keep the stuff tight. I don't believe that they're telling their buddies, not for a second.
But you know what, though? This is interesting. If you look at not this week, but next week, the calls, there's some mind-blowing open interest here.
Oh, Joel.
Yeah.
What do you got?
In the SEP 35s for next week, 97,000.
But that's in the money, though, so that could have been different. What about out at like 37, 38, 39? Anything in there?
37, there was nearly 7,000.
That's pretty small. It's AT&T.
Yeah, but that 96, that could be a hedge position.
Yeah, there's other stuff happening there. I mean, you also have there's all kinds of funny things happen when you're in the money. People selling the stock. It could have been on for a long time. There's a lot of different cattle or a lot of different reasons when they're in the money like that. It's like out of the money ones that are interesting. The ones that are like 37, 38, 39. Because that stock hasn't been there for a while. So is anybody speculating that AT&T could have a big move? That would be curious. I don't think that's the case. Doesn't look like it, at least from what you're saying.
Yep.
All right, let's go to our biggest mover of the morning. That's not in terms of percentage, not actually AT&T. Surprisingly, it's Acadia Pharmaceuticals, ACAD. Their Harmony trial, phase 3 Harmony trial for a drug that treats dementia-related psychosis, met its primary endpoint, and they're going to submit to the FDA in 2020.
Up 17 points here. Let me go look at the ETFs. I know it's a little bit of the XBI. I want to see who else is holding this. Give us a breakdown here.
Well, the good news for shareholders is it's up $17.70 at 41.50, a tidy 75% gain. The bad news is it's 13 bucks off its high.
It's flaking.
It's 7 a.m. They decided to take this to 54.90, and then 50.
Algos excited.
40.90
Algos.
And that took out if you were just selling at the former all-time high. Oh, look at that, 51.99. So that was a former all-time high. You're leaking. I'm not going to say anything about the upside here. I'm just going to look at this 15-minute chart, and I'll say they're supported 38.50 here. That's when after you hit that 54.90 level, that's where you came down to 38.50. So still $4 away if you're playing it for the long side. 38.50 appears to be support. A little bit less of the silliness after it went to 54.90. A little bit more of a tradable level might be 47. I see a high at 47.08. And then 45 even. So there's a couple levels, still $3-4 away. After making that high, you had a series of lower highs on the 15-minute, but it's starting to reverse that trend right now. So 38.50 to 45, a potential range in AC.
What was the drug for?
Dementia-related psychosis.
Alzheimer's.
Wow.
Related to it. Yes.
Yeah, not the actual.
Not actually. But still dementia, which is in the family.
Which is something that everybody is trying to figure out. So I'm just trying to see if there's any, sympathy plays here. So XBI owns 1.6%. I do have a small position XBI overnight, just coincidentally. The big one, FBT, it owns 3. Let me just grab it again. I had it in front of me a second ago. 3.44%. So FBT is going to get a pop from this. It's over, so it's going to get more than a 2% move just from ACAD without anything else. So FBT is going to pop up on this here too. I don't know if anybody's very closely for sympathy, but
look at the way it had traded last week. They thought they were wrong. Look at that, from 29 to 23.80. They're
down.
Nervous ahead of that report or that disclosure. Holy mackerel. Leaning the wrong way, but big windfall here. We'll see. I don't know, 54.90. I'm pretty sure that's going to hold up today. It can hold up for quite some time. AT&T coming back down to earth here, up 276. Now trying to stay in the 39.
I would have thought it would get a buck and off of it. I would think that's worth a buck, not $2.70 or $3.74. So anyways, it is hot right now. It's going to stay hot here. It's going to be up significantly. I think you're right. I don't think maybe it doesn't see 40. I thought it could. It got 39.90. I think it could get to 40 when it got to that high, but now it's peeled off it. I think it's going to struggle up there.
Okay. So the one more thing I'll add on the Acadian news is there are no FDA-approved drugs for dementia-related psychosis. So this would be a first if they can get it through the FDA's pipes for ACAD. What about Symantec here from Friday? This was a Friday intraday.
Yeah, more takeovers for this. How many times can this thing get taken over?
Right. Intraday headline Friday for SYMC. They're getting taken over by like 4 companies apparently.
Only parts though. They just keep selling off the parts.
Right. The price from Friday midday was 26 to 27 bucks a share.
And this was just a rumor, right?
Right. Yes, and it would still allow Broadcom to buy Symantec's enterprise unit, and this is again just for part of the company, but still.
I don't know what to say here either. Huge move for the stock again. I mean, they've sold off so much stuff. How much more is left in it? I mean, they got excited. They took this up to almost 26 bucks, 25.77, but peeled out those lows. Gets back to maybe where the price that it was, like in the mid 23s. Maybe it's interesting at that point. 24.68 here this morning. I just think they keep selling everything off. What's going to be left?
I'm not sure. Former high of the high of the move was here this morning was 20. This is from Friday? Boom, boom, boom. This is from Friday. You had a spike up to 25.77. That's what we were talking about. It's been up in that area a few times. Really, it's stalled at 26, the 26 even. That was on July 10th. You've already backed up there, but keep an eye on 25 3/4, 26 is potential resistance. Coming back down, you move at, you're right, 22, 23 looks like if you come back into that area. But nice move for it on Friday, and people are sitting on their hands a little bit today. Up only 18 cents here at 24.70.
It was a mostly quiet day before the AT&T headline. I had a lot of ratings on my list.
Yeah, there was a lot of ratings, and we could go highlight some of those. I mean, you're right. It was AT&T is like everything today. It's everything that everybody's going to talk about. Amgen, we didn't say the Amgen. Spencer's right. It's down significantly. They had a trial, and it's trading down.
Yep. They were granted the fast track designation for a drug and they gave an update on a phase 1 study for KRAS G12C mutated solid tumors. The drug is AMG 510. It's an oral therapy. I'm not going to read more about this release, but the cancer drug is all I need to know.
Off the lows of the pre-market session, quite a bit off the lows. They took it down to 197.20, and you're back above 200. Ways to go to get to the bottom of the range from Friday. You need to get all the way to 206.10. So if you get a quick spike there, I'll just look at the daily chart here. This had a real nice August, starting to get back some of those gains. You have an area 198.63. You showed a bottom there. Also 198.72. Another low at 198.01. So let's see that. It popped the first time just under that area. Let's see what happens in the regular session, but definitely in the red.
I just saw that a friend of our show, Ben Axler, and he was at our trading summit, I believe. He'll be on CNBC to talk about his sell rating or short position in Church and Dwight. That was from Thursday, I believe. He issued that report. But
Spruce Point?
Yep, Spruce Point. Yeah. So CHC, that's one of their biggest moves in a while as well. But that was one of the headlines that I missed from last week. So I'm still playing catch up here.
Yeah, that's fine. We're all still playing catch up all the time here, and we're all still in shock at the AT&T move. Lots of ratings. Let's go grab a few of those highlights. There is some interesting ones here this morning.
Yep. I want to start with Susquehanna, which is upgrading Nutanix and NetApp this morning. Nutanix upgrade to positive, price target $45. NetApp upgrade to positive, price target $75. So NTNX and NTAP.
I mean, the stocks have been on the comeback trail. If we go to NetApp, it got hit on the earnings. Buy the dippers have come in. It sat there for basically better part of August. Finally, the last 3 days has been coming up. We've been talking about the value trade, and this is the exact value trade here. I mean, 3.6% dividend. I don't have the multiple in front of me, but I know it's pretty cheap multiple trades with too. I mean, these are the stocks that have been in favor the last 3 or 4 days. Even stocks like AT&T. It's been the lower PE stocks that have really driven the rally in the last 3 days. NetApp, so perfect timing for an upgrade here. It's got room. I mean, we're in the gap area, so really got room to 57.37. But if you're coming in here now, I mean, a week and a half goes $45. You're way late to the party if you're coming in here now.
I see the gap area Dennis is talking about. There's air in there. There's absolutely nothing but air up to 57.37. Not being heavily traded this morning, up on a couple hundred shares. Boom. Right where we're trading right now, 53.45. So that's above your high from Friday by quite a bit. And we'll see. Really no resistance here. And then the other one was Nutanix. And that one got beat up. came back, had a rounding bottom. I think it came back off earnings. You're traded at 25.5. That's up $1.54, 6.5%. And at least you got a reference here. You got 26 even. That was your high on August 29th. That was on the day of the good report. The day it traded 27.5 million shares, way above its average volume. So there's a target for you, 26 and NTNX.
What else you got for us, Spencer?
Susquehanna also upgraded Pure Storage, PSTG, to positive, raised their price target to $25. Moving on from the Susquehanna upgrade, what else? Chipotle upgrade at Webush this morning to outperform. And we're going to be joined by Michael Pachter, but he is not their Chipotle analyst. Just to make that clear.
I don't know, man.
Late to the party than Chipotle too. No, not late to the party.
I don't know. Where do they think this thing's going? I mean, it's up $12, 848. Is this a new high of the move? Let me see what we got here. Interesting area. You had a pair of highs at three highs between 847.49 and 848.84. So there's your resistance. Breaking out new all-time highs, 850, up $12. Is there any volume with this? Boom, boom, boom. Not much volume, but it's $800 stock, so you don't need much volume to take care of it. Trading due to make a new all-time high today. All-time closing high, if you're looking for a better level, 842.11. That was your close on August 27th. That's the all-time closing high for CMG. And
it's only up 1.2% though, so you'd think an upgrade could drive this even farther. So I look at this and I think, you take out the 850, you could be at 860. So trend is your friend. I think you're way late to the party, but if as a trade, breaking out, I mean, this is the kind of market that, as things are getting driven in right now. So I can't argue with you as a trade here.
And SPOOs are at the highs of the session, up 10 handles, 29.90.75. Bond still down $1. So just kind of a slow roll up this morning. Hard to find some sellers that's in this morning. But AT&T did find some sellers here. We're back down
finally
$9, 38.78. We're talking about all those people in the money with their.
I can't believe it almost hit $40.
Wow. But we'll see. It's going to trade a lot of volume here. We'll see see where we end up.
All right, 3 minutes until we grab our gas. Let's do one more. Activision Blizzard. Stiefel adding it to their select list this morning, raising their price target to $65.
That's 3 analysts in a row. Now we're going to have Michael Pachter. He's probably going to talk it there too.
Yep.
So basically, in the last week, we've had 3 analysts get positive commentary on this. I do own this long-term portfolio because of the person who's coming on here in 2 minutes, Michael Pachter. I've talked about that before on the show, so I'm sticking with ATVI.
Yeah, nice move. Broke out, and let's see, 55.48 is where you're traded. That's up 90 cents. Let's look at that high from the other day. That's 56.60. That's a buck away from here. You did have a double close at 54.58. So that was the high of the rebound. So I'll wait for it to come back down to that area here for to cover a potential short if anyone's doing that. But keeping on that high from last week, 56.60 for a potential target. Let's just take a look at some of the other ones in the space. Take-Two Interactive. That's almost back at all-time highs, Dennis. Don't look now. It's traded down.
That's the one I wish I would have bought when it was down in the 90s. I wanted it to. I bought EA. I bought Activision. I wanted Take-Two. I should have bought Take-Two. I should have bought all 3 because I like the story. I sold the EA on the pop because I just thought it got ridiculous when it went to the 100s, and it was a good sell. I just never rebought it, which I never do. I still have the ATVI, and then I look at the Take-Two, and I was like, that would have been the one to buy because that's come all the way back.
And then EA?
EA.
Is there a rating on that too today?
No,
I'm just sticking with the
$100. I mean, what's it going to do? It got there again. Just looking at Friday, near $100. This is a big level for it. Can it get over $100?
Yeah, if you want to level above that, keep an eye on 103. 3 highs back in July between 102.88 and 103.59. So just call it 103, 103 and a quarter. But this one doesn't seem to be getting the lift of the others because it didn't have the specific upgrade.
All right.
But, trading in the green.
8:35. I'm going to take a quick break and grab Michael Pachter, equity analyst at Webush Securities. We'll be right back with Michael. All right, welcome back, everyone. Pre-market prep, Spencer Israel, Joel Elconin, Dennis Dick, joined now by Michael Pachter, as I mentioned, equity analyst at Webush Securities. Michael, good morning. How's your day going?
Oh, it's early and dark outside here. I'm on the West Coast, so just finishing my first cup of coffee. Looking forward to a beautiful end of summer day.
Well, we were just talking, Michael, about ATVI getting a number of bullish commentaries from analysts in the past week or so. I think 3. We had Stifel this morning. We had 2. Let me pull up on my list here. I had the ratings up last week. We had Stevens and BMO bullish on ATVI last week. Tell us an update of where you stand on the issue.
I don't think I've had anything other than outperform since I initiated in 2001. So I'd have to look it up, but I can't recall downgrading this company ever. It is best in class in terms of, console publishers. They're very good in mobile. They bought King and they're expanding in mobile with a bunch of their Blizzard properties. And they're just on the verge of, seeing new services like Google Stadia emerge where you can play games without a console. And that's going to expand their addressable market and everybody else's by at least 6-fold, maybe 10-fold. So you should see a doubling of game sales. They're uniquely positioned among the big publishers because they own all their IP. The other big guys have either licensed properties like NBA for Take-Two or all the NFL FIFA stuff for EA, or they have onerous contractual deals with their developers like Take-Two does with the Rockstar guys. They pay 50% of the profits to a couple of employees at their company. Activision is notoriously cheap and doesn't pay a giant amount of profit to their developers. And as I said, they own all their IP. So they're probably going to thrive more than the other guys in the next 5 to 10 years. And so I think this thing is just beginning its rally.
All right, looking at the rest of the year here, Michael, in terms of new releases and pipelines, Activision, of course, has Call of Duty Modern Warfare out at the end of October. Take-Two has Borderlands. EA has a new Star Wars game. Which company has the best pipeline for the rest of the year?
Oh, I mean, if you just look at this year, I'd actually say probably EA because FIFA is damn near as big as Call of Duty, and that's coming out at the end of this month. They have Madden in the market, and they have a Star Wars game coming in October, or I guess maybe early November. So they've got more when you add it all up. Take-Two, its NBA, Borderlands, and Outer Worlds games combined probably add up to about Call of Duty, and Activision's really only got Call of Duty. So EA's probably got the best lineup, but that's sort of like, buying into media companies based on their movie lineup for the next 3 months. Yes, you might get a 2% rally, but there's no staying power if they only have one movie every few years. You really got to look at the long-term pipeline. And Activision, as I said, has a lot more stuff, and they own it all, so they generate incremental profit when they start to see an upswing in revenue growth.
We're on the line with Michael Pachter, equity analyst for Webush Securities. Michael, just quick question here. I mean, you do your homework, you do your own stuff. I mean, do you pay attention to any other, analyst ratings on this? I mean, we've noticed patterns where, sometimes the ball gets rolling. I know you've been in this. You've had your stance through the ups and downs. Do you, just pat them on the back, have any interaction with them, or you just keep your, your eyes focused on what you're doing and not pay attention to anybody else?
Oh, I have to pay attention because the media asks, and occasionally investors seem to want to compare us. So I've got to, at least acknowledge that I have competitors. The Stifel guy is very good, so I pay attention when he makes a move because I think he actually knows what he's doing, and I respect him a great deal. The Stevens guy, I believe, started covering this sector in 2019, and I'm almost positive, like in the last 6 months, maybe the last 3. So I can't name the guy, wouldn't know him if I walked into him, and so maybe he's the best analyst on the street, but he's been doing it for a shorter period of time than anybody, and I can't name the BMO analyst. I don't even know who it is. So maybe he's good. I don't know, but yes, Stifel, that guy's really good. I like the guy a lot.
Michael, if I could bring it back to the stocks here, Zynga, I've been seeing ads for their games all over the place. Every website I go to has an ad for one of their games. They've got Farmville, Words with Friends. They've got properties for Game of Thrones, Star Wars, Harry Potter. Tell us thoughts on Zynga here.
Advertising is what they actually call it user acquisition cost. So in game advertising for mobile, you're actually trying to attract people to download the game. And you actually tend to see that when the games aren't growing as rapidly as the company would like. Interesting, the ones you mentioned, I've been seeing ads for Merged Dragons, which is their second biggest property. Words is their third biggest property. I've seen zero advertising for Empires and Puzzles, which is their biggest property. So I actually think I want to turn your question upside down. The lack of advertising for Empires and Puzzles means that game is growing organically. There is a large contingent of shorts in Zynga who think that game has peaked, and they're going to get their faces ripped off because the game has not even begun to peak. It is still growing, and it is literally the best mobile game I've ever played. I'm several $1,000s into it. I totally understand why people play it and why they spend money, and I think that game alone is going to take Zynga stock up to my $9 price target.
You said you're several $1,000s into the game?
I am, in less than a year.
Oh my.
What's the game?
It's called Empires and Puzzles, and if anybody listening is a real gamer and actually competitive and likes to show off how good they are at games, this is the game for you. And I will still kick their ass.
What do you have to? Do you go against other players, or you go against the clock?
It's player versus player, and there are alliances. So your alliance can be as many as 30 people, and it can be a war can be as many as 30 on 30. But you're still individually taking out individual players. And honestly, the player versus player aspect is pretty much pointless. It's just for bragging rights, sort of like Trump attacking Chrissy Teigen. Like, what's the difference? But you do it anyway because it's fun. So I have to say, it's the only game I've ever played on my phone where I actually fist pump when I wipe somebody out. Right. I physically fist pump.
Empires and Allies, shorts.
Empires and Puzzles.
Excuse me, Empires and Puzzles. Well,
there was a game called Empires and Allies by Zynga as well, by the way.
Shorts will get their faces ripped off because of this game. Michael, I want to ask you before we go about GameStop getting some positive commentary from Michael Burry of the Big Short fame a couple weeks ago. He likes their balance sheet. Do you have thoughts here?
Yeah, he's right. And, this is a now micro-cap company, so it's really hard to get any long-only investors interested. The shorts think it's a zero, and where they are incredibly stupid, and I mean, seriously, anybody who short the stock right now is just not paying attention. Microsoft and Sony have each announced new consoles in 2020, and each company has confirmed that their new consoles will have optical disc drives, meaning there will be physical media sold. You will buy a game disc if you want to. You can certainly buy a download. So the short thesis that discs are going away and GameStop's going out of business is wrong. Launching in 2020, meaning that there will still be discs at least through 2027. And these guys generate more than $200 million a year in free cash flow. Their market cap is $340 million. They have $500 million of cash on their balance sheet, $100 million of net cash. So if they want to go private at the current rate of cash generation, they can do it in 2 years. And if they get a private equity firm interested in just looking at a $200 million free cash flow run rate for 7 years, why wouldn't somebody pay $800 or $900 million, which would value this thing at $9 or $10? So I've got a $9 target on this one. I actually think this is a company that either gets taken out by private equity or taken private by current management. I've actually told my bankers they should be out there pitching that, because this is a no-brainer. If you offered me the CEO job there for $1 a year and 10% of the equity only once the equity gets to $8 or $9, I would take it in a heartbeat. I could make that happen, and I'm pretty confident that the current management team can do the same.
But what's going to be the catalyst there?
They did a 12 million share repurchase with a Dutch tender a couple of months ago. I expect they're reporting tomorrow. I expect that they're going to do the same thing again tomorrow. They'll announce a 10 or 12 million share repurchase, and you're just going to see their share count keep dropping. So if you take the 200 million of free cash flow and divide it by 90 million existing shares, it's over $2 a share on a $3 stock. That just doesn't make any sense. If the share count declines, let's just say to 80 million, and they still generate $200 million, it's $2.50 a share. If the share count declines further to 70, 60, 50, the EPS keeps going up. The stock isn't going to be trading at 3 if the company's earning 4. Just not going to happen. So again, I think the shorts don't get this. They think cash flow is deteriorating rapidly, and they're wrong.
All right, a couple more we're getting from our chat here, Michael. On Netflix, you were negative on it all the way up. It's had a rough go of it of late. Are you still feeling the sell rating?
Yeah, I have to say, I'm always right. Just my timing's bad. So look, I'm not always right, and when I'm wrong, I change my opinion and I upgrade. This one, I'm not wrong. I've been negative on the stock since 2012, and to be fair, I thought that Disney, Fox, Warner Brothers, and Comcast would behave rationally, would pull their content, would launch competing services, and I thought this back in 2012 and wrote about it. Here we are, entering 2020, and it's finally happening. All 4 of those companies, 2 of them now are Disney and Fox combined, are pulling their content. All 3, Disney, Fox, and then Universal and Warner, are launching their own services. And it doesn't mean Netflix is a zero. I have a $188 price target, which values these guys, at something like $90 billion. So I don't think they're a zero. I just think they're vastly overvalued, and you're going to see competition for Netflix's future domestic subscribers. And I think domestic subscriber growth is going to stall in the next year, and Disney and HBO Max are going to take off. So I think once investors see, slowing growth, and they saw it last quarter, the stock drops to my target. And at 188, sure, I'll upgrade to neutral. Absolutely. I will feel the love when they hit my price target, but my target's 188, and I think that's the right value.
All right, let's ask about Roku here. Just unbelievable performing stock, and you start covering these stocks, and you have price targets, and you think, wow, it'd be great for it to hit the price target. This one, I know you're a little bit lower now here, knocking on the door over 170. What a relentless stock here. Where's a place to re-enter this baby if on a pullback? What are you looking for here?
I have a neutral and a $106 target or $108 target. So I saw one of my competitors this morning take his target from 60 to 160. And that's what analysts do. It's like, hey, he read the chart. The stock's $100 above his target. So he took his target up $100. What's different today than last week that's worth $100 a share? That's just crazy. That's literally $12 billion to the market cap. Why does he think that? He doesn't think that. He's telling you where the stock is. This stock is behaving irrationally. I don't hate them. They have a great business. Their player business is not even close to being done. When people who have more than one television tend to have older second, third, fourth televisions. You need a Roku player if you want to watch internet television in those other rooms. And the platform business, which is the OEM adding the Roku operating system, is a great business, and they really do have an elegant, great solution. What the street has done wrong on this stock is they're giving Roku credit for owning the content that flows through the platform, and that's crazy. Just like Netflix. They somehow think that if Roku displays other people's content through its platform, that they're going to collect some kind of a toll. They do get a toll if you sign up for CBS All Access or Disney Plus or Netflix through the Roku platform, but they get a small fee, and it's not giant on a recurring basis. They don't have the leverage that the share price implies. So I actually don't think there's an entry point till it gets below my $106 target. I wouldn't be looking at this thing long until it drops back.
And last one, you've got a buy, I believe, still on Turtle Beach. What's going to be the catalyst on here?
It's another one that, they're profitable, pretty wildly profitable, above $200 million in revenue. I think that the shorts believe that Fortnite was a fad. It caused a one-time, uptick in headset sales, and now the shorts think everybody playing Fortnite has a headset and will never buy another one. The fact is that, in the world, we buy about 300 million headsets a year. And out of those 300 million, Turtle Beach literally sells fewer than 3 million. So they have about 1% market share. And I think the shorts think it's a commodity business, and you'd rather have a Sony headset or a Klipsch headset or a Bose headset than a Turtle Beach headset. Not if you're doing it for games. And the market for gaming headsets continues to grow. So 300 million headsets a year, gaming headsets probably about a third of that and growing. And Turtle Beach has a small percentage and a great brand and very good technology. So I don't think Fortnite's a fad. I don't think Apex Legends is a fad. I don't think Call of Duty's a fad. Multiplayer gaming where gamers talk to one another is going to continue to grow. They have a nice market position. And if the stock stays down here, somebody should buy them because they have a real business that has recurring revenue and is profitable. So I just think that the sell-off has been overdone.
Michael Pachter has been on fire this morning, equity analyst at Webush Securities. Michael, as always, thank you for your time. We love your insights. Get some sleep, and we'll talk to you.
I know. I'm up for the day.
Right.
I'm going to bed after Monday Night Football. So,
Hey, Michael, what's the game you spent the second most amount of money on?
Oh gosh, there are so many. I'm probably $1,000 into Candy Crush. But again, that's over a multi-year period.
And what
Candy Crush, I was probably spending $25 a month, 25 or 30. This game, I'm spending at least now $100 a month, and early on, I spent, $500 a month.
What level are you on in Candy Crush?
I stopped playing at 3,500, and it goes to 5,000. So I just kind of finally realized that what's the point?
Maybe we'll have to put Dennis. Does your mom still do Candy Crush? You want to put her up against Michael Pachter?
I don't know. She waits for they come out every week or something with new levels, so she waits for them.
Dude, I think
plays it all night until she does the new levels.
Yeah, all right.
Thanks, Michael.
We'll have to get a tournament going. Thanks a lot, Mike.
My pleasure. Bye-bye.
Right. All right, 8:52 here, Joel. Where are we at in AT&T?
Oh, AT&T is coming back down to earth here, as Dennis was in totally disbelief here, as we all were. Instead of being in disbelief, should have been hitting the sell button. Now up only 213 at 38.38. We backed off. Your high of the day's in. We're not going back up to 39.90 would be my speculation on this one. Coming back down to earth, 210. I don't know. We'll see. I mean,
rational people coming in and selling it. They're saying AT&T. Think about that, like the longer term, like the funds coming in saying AT&T up 10% one day. Ring the register. Ring the register. It's only up. It's giving back almost half the gains. Yeah. So it was irrational at 30. I thought it was irrational at 38, at 39, almost to $40. It's coming back down to earth. Now it's starting to look a little bit more reasonable.
Dennis, you think he tried from the line side today?
No. It's still 6%.
Okay.
It's worth it. So anyway, no, I'm not chasing it at all. So I think rallies to be sold here now in AT&T. I thought it could get to 40. It was at 39.5. Like, why not go to 40? It didn't quite get there. Got the 39.90. Peeling back off. Wait, is it really worth this much more because Elliott Management sent a letter? I mean, it's ridiculous move up there, in my opinion.
Okay. All right. S&P's making new highs for the session, up 10 handles. You want to go back? You want to go back to a little bit of ratings? They're really nothing on quiet week for earnings here. So
well, we're at the end of earnings now. Spirit Airlines getting downgraded this morning from Buckingham to neutral. Price target cut from 69 to 41 on save.
Stock's been in the gutter. One thing is stocks that have been in the gutter have been turning around here a little bit. Lots of support here on save. Go back to 2018, 34 to 35, all kinds of support. So if you want to call a bottom, I've always lost a lot of money calling bottoms, but if you want to, lots of support 34, 35. I'd say you stop up below 34, maybe pick it up in the 35 handle today if it gets ugly. I don't know, maybe you can take it out, but I wouldn't be surprised this one bounces.
35.47. That was your low back in August of 2017. Or excuse me, August of 2017. Also, 32.73 was your low back in November of 15 here, but it was trying to make a bottom here. It was, it had to drop off earnings, trying to make a bottom. Recent low of the move, I'll just bring that into play. The recent low of the move was 35.09. So that coincides with the area that Dennis is talking about for the airlines. It's just all of them. Just, man, all of them are looking pretty bad. UAL, that's held up a little bit better. Let me look at Delta. They're trying here, but it seems like
it's been the dog of the group. Save's been the dog of the group. So you're definitely, if you're buying it here, you're buying the laggard. I just say some of the laggards have done okay in the last few days. So if you're ever buying laggards, maybe this is the market to do it, and you have lots of support. It's not a bad setup. Again, maybe you give yourself a little room, but you stick it in the 33 handle, I wouldn't want to be long it. So if I was like buying it in the 35 handle today, I'd stop up below 34.
All right. Any other ratings? There are a bunch of other ones, but not as many big ones that we can go through. But any that caught your eye, Dennis, that we didn't cover yet?
I didn't write them down. I do have this one. F5 Networks catches an upgrade here. I own this in the long-term portfolio, a recent addition to my long-term portfolio. I bought it. Actually, I got the bottom of this one. Not very often I get the bottom, but I bought it on August 28th because I just thought it was getting overdone. I think I bought it at 122 or something. So I'm up 10 points here in 7 sessions. Again, benefiting from value trades coming in, but I was just analyzing it, and I saw somebody tweet it out in my Twitter timeline too, just that the thing was trading 10 times earnings or something. There is some growth still there. I'm a GARP guy in the long-term portfolio. I thought it was getting to a point. It's a stock that I had looked at before, but I forgot about. And then somebody tweeted it out in my timeline. I was like, yeah, there was one that I was interested in. Did a little analysis on my own. I was like, you know what? This kind of fits my parameters. It's pulled back significantly here. It's cheap tech, and I think it's still going to be growing. So I've got the long-term portfolio, sticking with it.
Up $3.04 on not a lot of volume, though. So we'll see where this goes in the regular session. Basis the daily charts. I'll give you some levels to look at right here, right now. 136.58 came in your August 9th high. The high before that, a little bit closer to 138, 137.91. There's some potential resistance levels coming back on the downside. You got a ways to go to get to the top of the range from yesterday, 133.22, and then previous day's high, 132.84. So a little bit longer term. If you're looking for a pullback on this, I'd be looking at 133.
Question from our chat here. This is a smaller price name. What do you think of KOOL?
What do they have going? Do they have something in them? I see it.
Anything about this company? Cool ticker symbol.
Yeah.
See what I did there?
Yep. Cool ticker symbol. I got it.
Yeah. This morning they announced a distribution agreement with the company to distribute a series of their products. So.
Okay, it's a reverse split stock, or I think it's a reverse stick spot because it's been up to 350 and change. Went up to actually 407.98. Looking at the recent price action, you got a pair of pesky highs here, 375, 371. You're clearing that right now, so let's keep an eye on the $4, 411. That was your high on June 18th, but once again, reverse or just really got killed, one or the other. But let's keep an eye holding. Oh, there's a 396 tick. I don't know. Is this going to be one of a low volume, a low float, crazy stock that goes up for 3 or 4 or 5 days?
I don't think so.
No.
I don't think so. I don't follow the story closely, but it's not looking like that to me in the pre-market.
Okay. What kind of volume is it having? So
78,000, so a little bit, but I don't follow the story closely enough to say anything fundamental with the company. But I don't think it's going to be one of those blast off. It goes to $8.
I looked at this around. I looked at the dailies, but man, this spiked to 550, Dennis. And
Today?
Yeah. Was that? No. No, that's Friday. Did I do that on Friday? Where am I getting this?
that was Friday.
I don't have that. KOL?
Because I don't have it.
I don't have any of that.
It was Friday after hours. When did this?
After hours, this went up.
Yeah.
I never even noticed it. So
big
this is after hours on Friday. So it's already given all the after hours gains back.
Yeah.
Oh, that's terrible. You see a stock goes up to 550 after hours and it's already trading back in the threes. Makes you think like that. I mean, now it's come all the way back down. If it was short, I'd probably cover it, but just because it went up that high. But when they give it all back like that, it's never a good thing.
Yeah, the old Friday afternoon news trick on that one. All right, Spencer.
Jump over just before I didn't give you imbalances here. We didn't say TLT is getting hit here today. So it's going to be good for the banks. So the banks are trading higher in the pre-market. Bank of America up 0.9%. Citigroup up 1% here. JP Morgan trading up 0.7%. So bank's going to be relatively strong because the TLT is lower. I've seen defensive stocks like Procter & Gamble weak here. 57,000 to sell in Johnson Johnson, 79,000 to sell Procter & Gamble, 65,000 to sell in Coke. So it looks like those could open down actually today. Merck also with a sell balance, 41,000 shares. Pfizer, 66,000 shares to sell.
All right, that'll be it for today's show. Thank you to our guest, Michael Pachter. Thanks to everyone in our chats on premarket.benzinga.com and on youtube.com/BenzingaTV. Catch our podcast wherever you get your podcast or we watch our show on YouTube. Please remember all the information from our show meant to be used as informational purposes only, not for investing or trading advice. Any questions, comments, concerns, email us at premarket@benzinga.com. Great to be back. Have a great rest of your week, of your day. We'll be back with you on Tuesday.